Hello everyone, welcome to Smart Investing. Let me pull out these three stocks that I have for you guys, these banking sector stocks. Today is Thursday, April 20th, 9:45. Markets are open. You can see here down the list real quick update. Market's been flat all week, earnings week, especially for the banks. Supposedly the major banks are doing well. Smaller banks are, reporting mixed signals. Investment banking, Goldman Sachs, and others, they're reporting negative earnings. Sorry, not negative earnings, but a loss on their earnings. Big difference. So anyhow, markets are open for the most part negative for now. I mean, markets just open, so we still got a bunch of more hours to go. You can see here, advances, decliners right here. Majority of the stock market is negative for now, but since it's been pretty rare for me to see it flat, if this number remains the same throughout the day, over 4,000, then I would expect it to stay in the negative territory, especially after 2 o'clock. So it's almost 10 o'clock now. So we have quite a bit of while for the stock market to see any movement, whether it's going to go up or down. So anyhow, banking services sector, let's get to that one. So I have here these three stocks: PBFS, LYG, and AUB. First one up is PBFS. We're going to go over. Whoa, it's weird. That's very weird. Oh, there's no volume. Okay, that's what it is. So markets are open, no volume. Nobody's trading this stock. So apparently this is a crappy stock because nobody's even trading it. The last 5 days, you can see here, hardly any movement. That's the first thing that came up. Usually I go over fundamentals, but as you can see here, we're going to go over technicals first. That's what popped out, so we'll do that first. This is in no particular order, but again, we're going to go over the overall evaluation for this stock. The last month, you can see definite downtrend, not even close to its 200. Now for the 3 month, definitely awful. I mean, this stock is dropped down very fast from its February, well, actually March. Again, I'm not looking at the price, just look at these drops. You have this one drop here, then you have this second drop, and it's almost flirting with this third drop here. So it's not a lot of movement on price, but again, I'm just reiterating the fact that these are big drops. Even though it's like $3 drop, still these are big drops for this stock because of its market cap. Market cap is only at 230, so automatically this stock is just awful. And this is real time, guys. This is real time. So earnings are barely even $1 for the year. This is definitely a company that's struggling. Definitely a sell-off since March, and we're in mid-April. So far in April, it has been slightly mixed. It's been up and then flat. Some days are down. Well, when it comes to May, typically those are down months. So definitely in May, there's going to be an acceleration in negativity. And then also with the results from the earnings that are being put out. So we have here further evaluation. Overall rating of 4 out of a 5 on the quant rating. I I'm in shock. Strongly disagree with this rating. Definitely awful. I don't see any of that past even a number 4. So I don't know where they got this rating from. I don't know how often they upgrade it. 4 out of 5, definitely not that strong of a rating. That's pretty much it. I don't even think I have to look at further information. We'll just look at the cash flow. But I know for a fact the banks are struggling. That's the main factor here, which is the cash flow. We have 49 million in operating. This was in 2022. And mind you, I'm not even giving 2023 numbers. I'm solely doing this based off of 2022 numbers. So it's around 50. So let's say 100. So even if they have, let's see. So they have basically 50 million in cash. I would expect them not to pay a dividend. Okay, that's definitely. Did they pay a dividend before? No, they haven't. Compared to these big companies, 50 million is not a lot. So definitely do not add to this watch list. PBFS. I would expect this stock to further decline. I don't see anything good with this stock at all. So I don't know if it'll go bankrupt. Maybe by the end of the year, who knows? Maybe a buyout, who knows? Anything can happen. But again, not a good company. So we're going to move on to the next one. LYG. LYG, $39 billion bank. Pretty respectable. Definitely it can take a hit if it is doing pretty bad for the year. Share price is only at 2.4. Strange for market cap to have that price. Very weird. Let's look at the 5-year. Let's look at the max. So it looks like in 2007, 2008, it was at $33 a share, and then from there it just tanked. Stayed flat throughout the last, 10 years at least. So 15 years actually. It's hard for this bank to come back. It's just been surviving, really. But again, throughout these years, I guess it maintained decency. And for it to have a $30 billion market cap, I'm sure they're doing something correct. It's just a very unpopular stock. So anyhow, let's look at the first page. 52-week high and low. So you only look at it at a gain, not even $2. Not even $2 in a price range, which is awful. 11 cents dividend, awful income. We have here earnings per share. At least they're positive, 0.34 cents. PE ratio is telling me that it is very undervalued. So, again, even the last 5 years, looks pretty flat. Awful. Not looking to gain much. If you're interested in this stock, just a very bad stock all around. Looks like it's on an uptrend for the last month. And who knows how long that would last. The last 5 days, definitely no activity. Somewhat activity, but not a lot. Then we have here the ratings. So 50-50. We have 50 strong buys, 50 hold. I'm sure our analysts all of a sudden covered this right after the March downfall, when I've been covering the banking sector for the longest, and I'm pretty much almost done. But again, like I said in previous videos, I'm going to keep mentioning it every time I do the banking video. Got to start remembering that these banking sectors and banking services, all these stocks in the banking industry, I stay away from them. They're pretty awful. You can do an alternative which is much, much better. Investment banking, they're okay. You just got to be very, very selective. And overall rating for this quant, 4 out of 5. I don't see that 4 out of 5. Momentum, definitely disagree. All around the board, I definitely disagree with these numbers. They're much lower than what they are. Let's look at more fundamentals, but just by first page, looks pretty bad. And I'm sure they've been around a long. I'm sure they have been around a long time, but with these earning estimates, even in 2020, which was the last results that I have, I only have nothing for 2021 or 2022. Everything looks like it's been reported from 2020 in the negative side. So earnings per share as of right now, again, like it's at 0.34. Very, very weak earnings. Are they paying a dividend? Still, they are. They only do 2 payouts a year, so only 7 cents. I wouldn't be surprised if a lot of these banks start cutting the dividend, which is what they should do in order to, I wouldn't say raise capital, but to save money and have cash on the sidelines. As of right now, I think that should be an important factor. If they're not doing that and managing this business well, then there's no need for a company to keep running if they're not taking action properly and, expect a bailout and all this nonsense. So anyhow, this stock is based in the UK. This is another failing bank. Again, pretty awful. I'd stay away from it. I know it's a $39 billion company, but again, the numbers aren't supporting the outcome for this stock. It's not in favor of the stock. That's what I'm seeing with the numbers that it's given me. We have here, I'm just going to skip all the fundamentals, sorry, but I'm going to look at the cash flow. That's pretty much what it comes down to when we're looking at this. So 2022, 22 billion. We have here 510. So they actually have positive cash flow, believe it or not. This is a company that can survive. So who knows? Who knows what will happen? They're just pretty much, they can survive, but they're just a very weak company compared to these other banks. Typically, American banks are favored. I don't know why, because right now with the current status for the world currency, which is the US dollar. But anyhow, I just don't see the numbers supporting investors. I mean, again, if the company, again, they can survive. They're doing okay, but in order to raise money in the public market, if this company went private, I think that they'll actually do better. But publicly, yeah, I don't see them raising capital. They're just not being favored. So again, I would not add that to the watch list. I'd add something else. I'm definitely going to say no to a lot of these companies. I already see it down the line. So I hope you guys know how and why my results are the way they are. And based on the numbers, this is, what I'm seeing. So I just hope you guys agree with me on this because it's going to get ugly. Last stock, AUB, Atlantic United Bankshares Corp. It's at $33.20. Market cap is at $2.5 billion. I rounded it off. Volume is very, very light. Not much activity for this stock. 52-week high and low. Only, I don't know, an $11 difference. Not much. They do pay a dividend at 1.2. PE ratio is at 11. Slightly undervalued. They are earning close to $3 for the year. It's not bad. I've seen a little bit more. Considering their market cap, looks like they can do okay. So now we're going to look at some technicals. 5-year chart, it looks flat. on the 1 year, it had a nice pop ever since December and also in October. So from October all the way to pretty much early February, that was pretty much a gain of $9, I'd say, rounded off to 10, to be fair, or close to it. Then we have this now downtrend right after that uptrend. And again, doesn't look good. Does not look good. We have here 3-month trend, downtrending. 1 month. Could just imagine drawing a line like that. Now, moving on to the analysis. So they're always recommending buy ratings a lot of the time. So we have 20% hold, 60% buy, and 20% strong buy. All for ratings. These analysts are middlemen. They're such liars. I would not invest in this stock. So overall rating from the analysts is 80% buy, which I think is awful, and they're full of it. I'd stay away from the stock. Much better options out there. Much better selections. If you can stay tuned and watch my channel, and you can see what stocks are actually good. Not just by talking, just providing numbers. Not only looking at fundamentals, looking at the numbers supporting the fundamentals. So we have the quant ratings here. Rating 3 out of 5. Yeah, we'll see about that. Overall rating 5.5. Income, yeah, I wouldn't go for banks for income. Let's see if they have any quality and any momentum. It's pretty much it that you can use this stock for. I don't see any value or growth. Not much quality in the bank or momentum. Well, maybe momentum, but again, they're on a downtrend for this stock. So overall, it should be probably another bank that can do better. So we have here volume again at 12,000. Well, close to 13,000. Very, very low. That's an awful number. So quant rating 5.5. I highly disagree with that number. I want to see the fundamentals a little bit more. So they're actually getting estimates of uptrends. That's weird, or around the same compared to Q4. We have mixed results that were given the last 4 reports. You have here that they missed, they hit. I guess they missed and then they hit. So not bad considering the sector. Again, I'm not even gonna look at the dividends. Awful. Just skip all fundamentals. I'm sure they're doing okay, but the real main factor again is the cash flow for the banks. I want to look at the annual. See what we have here. Operating at 403, 404 rounded off million. This is the number that I'm looking at, 2022. And this is just supporting numbers, but the main ones is always the, I wouldn't say current, but the most recent, to have, you know, better accuracy. So, they gotta have around 6. So they have negative cash flow. They have negative cash flow, and that's pretty much it. Not even worth it. So there you go. I would not add any of these stocks. Again, these two have negative cash flow, and this one can do okay, but it's just a lack of interest from investors to want to raise capital for this company. That's a hard sector to jump into. So there you have it. Those 3 stocks. Hope you guys enjoyed the video. I'm a little hot. I apologize. Should have brought some water with me. So anyways, I'll see you guys next time. I'm pretty busy. So I have more stocks coming your way. And stay tuned for the more bank stocks.